Hello everyone, this is Crystal with Slick Trade Academy, and in this presentation I'm going to go over the Professor Forex source group, signals, auto traders, strategy in general. Okay, now we've made some enhancements to this over the past, I'd say about 6 months or so, and what we found is that this is a highly profitable strategy for long-term Forex trades. And with these, this is very, very, very important to note. When a signal is issued, most of the time you have hours to days to get into these trades. Okay? Excuse me. And most of these trades last a duration of anywhere from, some are shorter and only last days, but most last weeks to over a month in duration. Okay, so these are longer term. They are not a quick. They are not a scalping technique. They are not. Excuse me. They are not. Just a quick entry and exit. Okay, these trades last a long time. And what I'm going to show you is right here. I'm going to show you a few entries. Okay, first of all, our indicators. You have the setup. You have the template and everything to install into your MetaTrader 4. And once you have that in there, you should be able to just right-click and load up template, Slick Trade the Professor. Okay. If we right-click and we go to our indicators list, you have a Hall Moving Average. This Hall Moving Average is set to 250. You have your Trend Rider, which is set to 100 with a deviation of 2. You have automated trend lines, which are set to 1366, 1366. You have a supply and demand, which is set to all of its default values other than the zone fibs. I like to have those set to true. And then you have a simple moving average of 200. Okay, and that is that white line right there. The Trend Rider is this dot system, which is a turquoise and a purple. Your supply and demand are these kind of boxes that you'll see. They're essentially support and resistance levels, okay? But there is a difference between supply and demand versus just a support and resistance level, okay? They're just similar. So that is something to keep in mind if you are used to using support and resistance. And then these lines right here, these are your auto trend lines, okay? In the upper right hand corner, you're not going to see this box. You're actually going to see something similar to this. You'll see text over here. The market is not currently open, so it's not loading in the news. Okay, I like to keep an eye on the news, see what's happening, see what's coming up. Now, with this expert advisor, okay, you can actually set this so that it avoids trading the news or sending signals during the news. Now, it's right here, this avoid news feature, and you'll see a minute to stop trading beforehand and a minute to start trading afterhand, okay? So 60 minutes before a news release and 30 minutes after a news release. This will avoid sending you a signal or avoid auto trading, okay? I like to set mine to avoid high news. You can also avoid medium and low news. And for whatever chart you have up, okay, in this scenario we have GBP USD, so you'd want to set it true to USD and to the GBP. Okay. If you'd like to also have speaks in there, when speakers come on, you can set that to true as well. Okay. And then this right here is just going to be the little news box. So if you just want to show the news and not actually avoid the news, okay, you just want to see it up there in that right-hand corner, you're going to set that to true for high and or medium and low. Okay. So that's what that little box is up there. As far as the strategy goes, okay, a signal, let's see here, I'll show you a couple previous signals. There was one that was issued here, okay, for a long position. Now, why I say to wait for at least hours, if not days, is because what you want price to do is to come back toward the Hall Moving Average. Now, the Hall Moving Average is this purple and turquoise line. See that right there? Okay. Many times after a signal, price is going to retrace toward that Hall Moving Average. Okay. So, in this scenario, if you would have entered right when that signal went off, okay, or if you even had your auto trader on, look at how far this trade would go against you. And this is not a minute chart or a 15-minute chart. You know, this is not a lower time frame. This is an hourly chart. Okay, so if I zoom in on this a little bit more, just to kind of give you a better look at it, look at how far that trade would have gone against you. Look at how many pips that trade would have gone against you before it went into your favor. Okay, that's why I always suggest to wait. It's very, very important with this strategy. This was a long-term strategy. Okay, so in this scenario, where I personally would have entered is right, actually, on this candle. Okay, so see, price came down to that Hall Moving Average. Okay, it came down. Actually, I probably would have said it right about there, is where I would have entered. Because that's a previous support level. Okay, there's a couple right in here. There's one right there. There's one right there, right about in there. Okay, so you could have entered at any one of those, really, kind of this range, essentially. But that's what I would have waited for, is that retracement back toward that Hall Moving Average. Then go for the long buy. Okay, and you see, it's going to go against you a very small amount compared to if you would have entered here and had it go against you. Okay, that's why I say wait for retracement. It's very, very important. Okay, now if we and as far as take profits, I like to set mine to 25 pips and then move my trail stop. Okay, use a trail stop, move it up, and lower your risk, break even, gain profit. You know, continue to gain as much profit as possible, because many trades that are issued from the professor will bring in, I mean, a ton of pips. You know, one trade could bring in, 500 pips. I've seen as much as 1,000. You know, it's very, very uncommon for it to issue under 100 pips. Okay, so like I said, these are longer term trades. Now, if we look at this trade right here, you could have gained, that's easily 100 pips. That's looks like about 150 or so if you would have waited for that retracement. If you did not, you would have only gained that 25 pip, increment, and you would have had a huge, huge loss before you experienced a gain. Okay, days. You would have been clear into the next week, the end of the next week, before you would have even seen a gain. Okay, so then, let's see here, right here, there was a buy or long position that was issued. Okay, and it was issued right there. Okay, now I personally, I would have waited for that retracement back down. You don't have to, but just make sure your account can handle a pretty heavy loss. Okay, now this one isn't as large of a loss as this last one would have been, but still, protect your investment. It's very important. Okay, so here it was issued. I would have waited till it came back down, probably about there. Okay, because that's a pretty good support. I would have waited till right about there. See that? Price, touched that level quite a few times. Okay, so that's where I would have entered. It would have gone against me, 20 some pips, which isn't much at all, and then kind of consolidated. Okay, so see, you actually had, same as the last signal, you have days to get into these trades. Okay? You have at least hours, but most of the time you have days to get into them. This isn't a rushed, thing. This isn't a, we're scalping against the trend and everything else, okay? Sometimes there are signals that come against the trend, but these are much longer term, okay, and safer. Because if you would have entered here, look at that, kind of consolidated bit. It did touch that whole moving average again, and boom, there comes in your profit. You could have exited there. You could have, continued to let it wait if you wanted. You had another exit here, and then look at this. At this point, you're hitting a supply and demand zone. Okay, that's where I would have exited. Okay, because it's hitting a, if you see red, essentially, okay, with the supply and demand zone, it means price has hit a pretty heavy resistance level, okay, and it's probably going to head down, okay, or it could head down, okay. So that's another thing to keep in mind. Check out these demand zones, supply and demand zones. See, where they're at in relation to price, okay. Now, that was a nice move. It went into profit, and that's a trade that didn't last very long, okay. It only lasted half a week or so, maybe half a week, okay. From the initial signal, it lasted closer to a week, but if you waited for that retracement, you got about a half a week trade. Okay, so that's a shorter one, but again, you can easily see that it hits that zone. Okay, and that means go ahead and exit that trade. Don't get greedy. Okay, there's another signal that was issued right here. Okay, I would have waited, as always, for a bit of a retracement, and not much on this one, because right there we've got a pretty heavy, shows right there, a pretty heavy resistance level. Okay, so I actually wouldn't have waited too much. Okay, that was more of the hours one. Wait for 4 hours or so on that one. You could have waited even longer though, because it ended up going against us a bit. It came on up to that 200 moving average, broke through it a little bit, but not much. It was in the period of 2 hours, and then it headed down. Okay, so you did have I think you had like a day to get into that trade, half a day. All right, so it's a little shorter, and then it started to go into profit. Okay, so with this trade, one thing I want to show you is that right here, this is something kind of cool to look for. You don't always have to, but you can. When this whole moving average crosses that 200 line, okay, and especially when they start to head in the same direction like that, what I personally do is I would have entered this trade here. I would have exited the trade right down here. Actually, no, a little higher. I probably would have exited closer to there, because look at that support level. See that level? See where price has hit there multiple times? Okay, that's where I would have exited first. Then, after price came back up to that whole moving average, I would have re-entered again. Okay, now it would have gone in my favor right away, but then it would have gone against me a little bit. Okay, and then look at that, boom, head straight down again. Okay, it came back up to the 200 instead of just hitting the whole moving average. But you had this cross here, and they're both heading down, and you had that signal for that sell. You've got the supply and demand zones. Look at this. It's all red. It's all showing red. Okay. So anyways, I would have done 2 entries. Here, exit around here, entered here. Oops, a little bit. I probably would have entered right about there. And then exit again somewhere down in here. I probably would have done right about there because that's a previous support level as well. See where price touched and bounced back up? Okay. Now you could have gained a lot more, but I'm just saying that's probably where I would have exited. Okay. You have the potential to gain a whole lot more. Okay. That has been a beautiful trade. So, that is how the strategy works. I prefer to trade longer, take longer trades like this. And the reason for that is you have a life. You can enter a trade. You don't have to constantly be staring at charts. You don't need to manage these trades all the time. You check them every couple days, or maybe you check in every day, and just to make sure it's doing good. I set my stop losses at previous support and resistance levels. Previous support levels for a long position or a buy position, and previous resistance levels for a sell or short position. So let's just say in this scenario here in this sell, okay, I waited for price to retrace just a little. Oops, I would have waited to right about there. Okay. I would have set my stop loss at the previous resistance, okay, which you could have chose here, which I would have chose a little above that, okay, because price can spike some occasionally, especially with news and things like that. So I would have set a stop here or here, okay. I know that's a much larger stop loss, but that is that previous, the heaviest resistance level that we have, okay. So that has to be up to you, okay. I think with this trade, I'd actually set mine right here, and that was because it's above these two. It's closer to that one, but we've got heavy resistance here as well. Okay, that was just kind of a extra spike up. Okay. So, as you can see, it didn't come anywhere near either one of those, okay? But that's just where I know I set mine like right around there. So, with a long position, let me show you with this one. Like I said, the signal was issued here. I would have entered right around there because there's previous support, okay? And I would have set my stop loss. I didn't actually get in on this trade, unfortunately. I missed it. But I would have set my stop loss right around here, because that's a pretty heavy support. Okay. And again, as you can see, it didn't come anywhere near that, but still, I always set mine at previous support and resistance. It's very important. Okay. So, that is about all. That is how the signals for Forex Source Group come in. That is what I mean by waiting for retracement. I want to show you a little bit on the stop loss because some of you have asked, and same with the take profits. You know, maximize your profit and lower your risk. Okay, by using trail stops and you know, or just exiting a trade when a major support or resistance level's hit, and then re-enter. You know, once it goes back up toward that whole moving average. Okay, so you guys have a great one, and I will talk to you later.